Hello everyone, how are you all? Hope you all are doing well. So we are doing what? Marathon revision of composition scheme. Composition scheme we would be doing. So what do you mean by taxable supply? Very quickly we would revise very important chapter undoubtedly from the summary book we are revising. If you don't have a summary book, please get it from my Telegram channel. Now, taxable supply. What do you mean by taxable supply? What is taxable supply? Supply of goods or services which is leviable to tax. Supply of goods or services which is leviable to tax is what? Taxable supply. Taxable supply. What do you mean by exempt supply? There are three things in exempt supply. Definition of exempt supply. What are those three things? You remember? First, nil rated supply. Second, wholly exempt supply. Third, non-taxable supply. Non-taxable supply. So, non-taxable supply comes under the definition of exempt supply. Comes under the definition of exempt supply. Very important. So, what do you mean by non-taxable supply, ma'am? So, the supply of goods or services which is not leviable to tax. Which is not leviable to tax. That means on which tax is not levied. On which tax is not levied is non-taxable supply. So, these three definitions undoubtedly important. You remember aggregate turnover definition now. The fourth, aggregate turnover we'll see. Aggregate turnover is very relevant at many places, like in composition scheme, like in registrations. At many places, the definition of aggregate turnover is very important. In exam, direct question also comes on computation of aggregate turnover. So, what do you mean by aggregate turnover? It includes taxable supply. Taxable supply, okay, on which tax is levied. That means it includes exempt supply. That means three things: nil rated supply, wholly exempt supply, and non-taxable supply. These three things. It includes these three things: nil rated supply, wholly exempt supply, and non-taxable supply. That means non-taxable supply comes under the definition of exempt supply. Exempt supply, okay. Then exports, and then interstate supply of the person having same PAN to be computed on all India basis. To be computed on all India basis. So, exempt supply includes all these things. Exempt supply, sorry, I am very sorry. Aggregate turnover includes all these things. Taxable supply, exempt supply, export, then interstate supply of the person having same PAN. Okay, on distinct person, if you are supplying interstate, that will also be included, and this all should be computed on all India basis. That means all the branches in all India, whatever branches or whatever registrations are there, it will be computed of all the registrations. Okay, all India basis. It should be computed from all India basis. So, it includes taxable supply, exempt, exports and interstate supply of the person having same PAN, and it all should be included all India basis. It should be calculated on all India basis. However, it excludes GST. It excludes GST. That means CGST, SGST, UTGST, IGST compensation cess. So, it excludes GST and value of inward supply on which tax is payable under RCM. Value of inward supply on which tax is payable under RCM. So, for example, I am a business entity. I have received legal services on which I have to pay tax. Definitely, I will pay tax, but it will not be included in my aggregate turnover. It will not be included in my aggregate turnover. So, aggregate turnover includes what? It includes taxable supply, it includes exempt supply, it includes exports, it includes interstate supply of the person having same PAN. It should be computed on all India basis. However, it excludes GST, CGST, SGST, UTGST, as whatever, any GST, compensation cess, IGST, everything. It will exclude GST in short, and inward supply on which tax is payable under RCM. It will exclude that also. So, this was one definition of aggregate turnover. Are you eligible for composition scheme or not is decided by what? Aggregate turnover. Aggregate turnover, okay. And next definition is turnover in the state or turnover in union territory. On what basis you will pay the tax? Okay, turnover in the state or union territory definition plays a role. So, that we'll see. First, we'll see what is the definition of turnover in the state or union territory. So, turnover in the state or union territory means aggregate value of, it means what? Aggregate value of all taxable supply, excluding inward supply on which tax is payable under RCM, exempt supply made within the state or union territory by a taxable person, exports of goods or services or both, interstate supply of goods or services or both made from the state or union territory by the taxable person, but excludes CGST, SGST, UTGST, IGST and cess. So, what all is included in turnover in the state or union territory definition? All taxable supply, all taxable supply, exempt supply. Exempt supply definition we have already seen those three things: exports, interstate supply of goods or services made from the state or union territory, and it excludes GST. It excludes GST. Okay. Now, who is eligible for composition scheme? We will see. If you are supplying from other than special category states, if you are supplying from other than special category states, in that case, what is the aggregate turnover limit? 1.5 crore in the preceding financial year. Your aggregate turnover is up to 1.5 crore in the preceding financial year, last financial year. If your aggregate turnover is up to 1.5 crore, this year very well you can go for composition scheme for all states other than special category states. For all states other than special category states. But in case of special category states, what is the limit? In case of special category states, it is 75 lakhs. It is 75 lakhs in the preceding financial year. In the preceding financial year, if your aggregate turnover, again I repeat, aggregate turnover is up to 75 lakhs, definitely you can go for composition scheme in the current year. Definitely you can go for composition scheme in the current year. So I hope it is clear. Now what are the special category states we will see? Meghalaya, Mizoram, Manipur, Arunachal Pradesh, Nagaland, Tripura, Sikkim and Uttarakhand. These special category states, in these states what they said? In these states the limit is up to 75 lakhs. Okay. So what is the memory technique for this? Man-UTS. 3M, Meghalaya, Mizoram, Manipur, Meghalaya, Mizoram, Manipur, Meghalaya, Mizoram, Manipur, Arunachal Pradesh, Nagaland, then Uttarakhand, Tripura and Sikkim. If you are supplying in these, if you are in these states, then the limit is 75 lakhs. That means aggregate turnover in the preceding financial year is up to 75 lakhs. Very well you can go for composition scheme in the current year. Very well you can go for composition scheme in the current year. In case of this Himachal Pradesh, Assam and Jammu Kashmir, the limit is 1.5 crore. Himachal Pradesh, Assam and Jammu Kashmir, the limit is 1.5 crore. Okay. So other than special category states, limit of aggregate turnover is up to 1.5 crore. Special category states, 75 lakhs. What are the special category states? There are 8 special category states, Man-UTS. And in case of Himachal Pradesh, Assam and Jammu and Kashmir, the limit is 1.5 crore. 1.5 crore. I hope it is clear. Now, what is the limit? Limit is of aggregate turnover. You have to see aggregate turnover. Okay, you have to calculate aggregate turnover. And if it is, for example, you are in Maharashtra, the aggregate turnover comes to say 1.2 crore. Are you eligible for composition scheme in the current year? Yes, you are very well eligible for the composition scheme. Now, on what you will pay the tax, we'll see. So now you have to see the category of the registered person. You're a manufacturer. Okay. If you are a manufacturer, then the rate is 1% of turnover in the state or union territory. If you are a manufacturer, then the rate is 1% of the turnover in the state or union territory. 1% of the turnover in the state or union territory. If you are a supplier of food, that is restaurant service. Then 5% of the turnover in the state or union territory. 5% of the turnover in the state or union territory. And if you are a trader, then in that case 1% of turnover of taxable supply. In this, if you are a trader, in that case, it is taxable supply, not turnover in the state or union territory. It is taxable supply of goods or services in the state or union territory. It is taxable supply of the goods or services in the state or union territory. I hope it is clear. So, if you are a manufacturer, in case of a manufacturer, 1% of the turnover in the state or union territory, 1% of the turnover in the state or union territory. If you are a supplier of food, restaurant service, then 5% of the turnover in the state or union territory. And in case of a trader, 1% of turnover of taxable supply of goods or service in the state or union territory. 1% of taxable supply of goods or service in the state or union territory. So, in case of composition scheme, what is important in case of composition scheme? What is important? What category of registered person you are? You have to see. If you are a manufacturer, 1% of the turnover in the state or union territory. Turnover in the state or union territory definition we have already seen. Okay, you have to pay tax like this. This is CGST plus SGST. 0.5 CGST, 0.5 SGST. So if you are a restaurant service provider, then in that case 5%. 5% is again total 2.5%, 2.5% of turnover in the state or union territory. And if you are a trader, 1% of taxable supply of goods or services in the state or union territory. Now, if you are any of these A, B or C, if you are any of these A, B or C, if you want to supply services, yes, you can supply, but up to some limit, Generally, composition scheme under 10(1) is predominantly for goods sector, but nowadays the goods sector also provides some little bit services. So, little bit services are allowed. How much services are allowed? Of a value not, you are eligible for composition scheme under 10(1), provided you provide service up to value, maximum value not exceeding, of a value not exceeding 10% of the turnover in the state or union territory, 10% of turnover in the state or union territory in the preceding financial year, or 5 lakhs rupees, whichever is higher, or 5 lakhs rupees, whichever is higher, or 5 lakhs rupees, whichever is higher. So if you are paying tax under A, B or C, if you are paying tax under A, B or C, in that case, if you are paying tax under A, B or C, in that case, you may supply service of a value not exceeding 10% of the turnover in the state or union territory in the preceding financial year, or 5 lakhs rupees, whichever is higher. 10% of the turnover in the state or union territory in the preceding financial year, or 5 lakhs rupees, whichever is higher, okay. So I hope it is clear, okay. Now, so for example, you are a trader of mobile. So you may provide some mobile repairing services. So is it allowed? The composition scheme is allowed. For example, your turnover is, you are saying, just 80 lakhs rupees. So yes, composition is definitely allowed to you if you are in Maharashtra, for example. So definitely it is allowed. Why? Because it is below 1.5 crore. Now, if you are providing services, is service allowed for 10(1)? Yes, 10(1) people can definitely avail service, but a maximum amount of what? 10% of the turnover in the state or union territory. Which turnover of the state or union territory? Last year. Preceding years, turnovers 10%, or 5 lakh rupees, whichever is higher. Or 5 lakh rupees, whichever is higher. You can provide what? You can provide service of up to maximum this amount. Up to maximum this amount. I hope it is clear. While computing value of service, as referred in second provision to 10(1), interest on loan deposit advances will not be taken into account. So while you are computing what value of services, in that case interest on loan deposit advances will not be taken into account. The interest on loan deposit advances, will not be taken into account. So this the computation we are doing for 10% of the turnover in the state or union territory, or 5 lakh rupees, whichever is higher, that we are doing. So in this case, interest on loan deposit advance, though it is exempt supply, but it is not included in this turnover in the state or union territory while computing this limitation. Because nowadays everyone is, have, for example, some funds they have put on the FD, the interest is coming. So government said, oh, don't take that in the limit of this 10%. Okay, so the interest on loan deposit advance, even if it is given in the question, you are not required to take it in the adjustment part. Okay, I hope it is clear. Next, conditions for scheme under 10(1). What are the conditions for 10(1)? So if you satisfy these conditions, then only you can take composition scheme under 10(1), otherwise not. Okay, so the first condition, simple, regarding service. What? Either you are not engaged in supply of service other than restaurant service. For restaurant service, composition scheme is available. Other service sector, you should not be engaged. If you are a manufacturer or trader or restaurant service provider, if you are engaged in service, then also it is okay, but it should be within the limit prescribed, that is 10% of turnover in the state or union territory, or 5 lakh rupees, whichever is higher. Then you are not engaged in making supply of goods or services which are not leviable to tax. That is, you are not dealing in non-taxable goods or services. Okay. So, for example, I am dealing in taxable as well as non-taxable goods. Is composition scheme allowed to be? No. Composition scheme is not allowed to whom? Those who are engaged in what? Non-taxable goods or services. To them, composition scheme is not allowed. Next, he is not engaged in making any interested outward supply of goods or services. What did they say? You are not engaged in making interested outward supply of goods or services. Interested outward supply. not inward supply, interstate outward supply. You should not be engaged in interstate outward supply of goods or services. If you are engaged in interstate outward supply of goods or services, composition scheme is not allowed to you. Composition. So, for example, I am supplying goods from Mumbai to Chennai. So in that case, is composition scheme allowed to me? No. Interstate outward supply, if I am dealing, composition scheme is not allowed. For interstate inward supply, yes, composition scheme is allowed, not a problem. Not a problem. So in exam, they sometimes give you he is engaged in interstate inward supply. In that case, if inward is receiving, not a problem. But if outward is doing, composition scheme is not allowed to him. Is it clear? Next. Not engaged in making supply of service. You should not be engaged in supply of service through ECO, who is required to collect TCS under section 52. So if you are engaged in supply of service through ECO, composition scheme is not allowed. What is the condition? You should not be engaged in supplying services through ECO. Services through ECO. Which ECO? Who is required to collect TCS under section 52. Then you are not a manufacturer of following notified goods. You should not be manufacturer. To a trader, yes, composition scheme is allowed. That is not a problem. That is not a problem. What is the problem here? Manufacturer. If you are a manufacturer, then composition scheme is not allowed. So, he is not a manufacturer of following notified goods. He is not a manufacturer of following notified goods. What are those goods? Ice cream and other edibles, whether or not containing coca. Pan masala, tobacco and manufactured tobacco substitutes. Manufacturer of aerated water. Fly ash brick, fly ash aggregate, fly ash content, fly ash blocks, bricks of fossil meals or similar siliceous earth, building bricks, earthing or roofing tiles. Okay. So, to these manufacturers, composition scheme is not allowed. To these manufacturers, composition scheme is not allowed. Who are they? Is a not manufacturer of following notified goods: ice cream or other edibles, whether or not containing coca, pan masala, tobacco and manufactured tobacco substitutes, manufacturer of aerated water, fly ash brick, fly ash aggregate, fly ash content, fly ash blocks, bricks of fossil meals or similar siliceous earth, building bricks, earthing or roofing tiles. So, to the manufacturer of all these, composition scheme is not allowed. Composition scheme is not allowed to the manufacturer of all these. So, he is not a manufacturer of the following notified goods. Composition scheme is not allowed to the manufacturer of this, but to the trader of this, composition scheme is allowed. Okay. Next, he is not a CTP, casual taxable person, or NRTP. Casual taxable person or NRTP, the composition scheme is not allowed to casual taxable person or NRTP. Next, composition scheme under 10(2)(a). Composition scheme under 10(2)(a). So, if you are a registered person, not eligible to pay tax under 10(1) and 2, aggregate turnover in the preceding financial year does not exceed 50 lakhs, then you can opt to pay at the rate of 3% CGST, 3% SGST of turnover in the state or union territory. So, this scheme is for whom? This scheme is for predominant service providers. For example, the interior designers, the architects, chartered accountants, company secretary. If the turnover, if any service provider, these examples I have quoted, any service provider, saloons, so any service provider, if their aggregate turnover in the last year, in the preceding financial year, did not exceed 50 lakh, then they can go for composition scheme under 10(2)(a). So, this scheme is for two kind of people, we can say. One is predominant service providers. The second is those who are ineligible under 10(1) and 10(2). Those who are ineligible under 10(1) and 10(2), that is manufacturer, trader, restaurant providing service in excess of limit mentioned in proviso 2. So, if you are a manufacturer, those who are ineligible for 10(1) and 10(2), that means you are a manufacturer, trader or restaurant providing service in excess of the limit mentioned in proviso 2. Okay, so I hope this is clear. What did they said? This composition scheme is available to whom? First is predominant service provider. Second is those who are ineligible for 10(1) and 10(2). Those who are ineligible for 10(1) and 10(2), that is manufacturer, trader, restaurant. You can be manufacturer, you can be trader, you can be restaurant, and you are providing service in excess limit mentioned in proviso 2. You are providing services in excess of the limit mentioned in proviso 2. So, if you are providing you in excess, you are providing in excess of that 10% of turnover in the state or union territory, or 5 lakh, whichever is higher. You are providing in excess of that. So in that case, 10(1) scheme is not allowed. Then you can come here. You are providing more services in that case. So in that case, you can come here. You can take the benefit in this 10(2)(a). In 10(2)(a), what you have to see? Aggregate turnover last year does not exceed 50 lakhs. Okay, then 10(2)(a) is eligible. You are eligible for 10(2)(a). In that case, what is the tax rate you have to pay? You have to pay 3% CGST, 3% SGST. You have to pay 3% CGST, 3% SGST of turnover in the state or union territory. Of turnover in the state or union territory. I hope it is clear. Next, conditions for composition scheme under 10(2)(a). What is this now? Again, 10(2)(a) scheme. The points are majorly similar except that service wala point here is not here. Why? Because this is for predominantly for service sector. All points, other points are same, like you are eligible for composition scheme under 10(2)(a) provided you satisfy these following conditions. What are those conditions? You are not engaged in making supply of goods or services which are not leviable to tax. That is, you are not dealing in non-taxable goods or services. Then you are not engaged in making any interstate outward supply of goods. This all we have discussed. Okay, now you are not engaged in making supply of services through ECO who is required to collect TCS under section 52. Then you are not a manufacturer of the goods or supplier of the services as may be notified. So they may notify the services under this, but up till now they have not notified any services. So again, you are not a manufacturer of all these ice cream and other edible ice, whether or not containing coca. Then pan masala, tobacco manufacturer, tobacco substitute manufacturer of aerated water, fly ash brick, fly ash aggregate, fly ash content of fly ash blocks, bricks of fossil mills or similar siliceous or building bricks or earthing or roofing tiles. So you are not a manufacturer of all these. You are not a manufacturer of all these. Then you are not a casual taxable person, non-resident taxable person. Now 10(2)(a) is applicable for all transaction of a registered person with same PAN. Now this is an important point. What is this? Either all registrations under same PAN, either all GST registrations on the same PAN will take composition scheme. If one is ineligible, all will become ineligible. If one is opting out, all have to opt out. So under same PAN, all the registration have to either go for composition scheme or they may withdraw from the composition scheme. Okay. This is applicable for 10(2)(a) as well as 10(1). If you are taking 10(1) scheme, then if one unit is taking, everyone has to take. If one is opting out, one is withdrawing, everyone has to withdraw. Okay, I hope it is clear. So again, in 10(2)(a), what is the rate? In 10(2)(a), very simple, ma'am, 3% CGST, 3% SGST of turnover in the state or union territory. In state or union territory, this definition we have already seen. Okay, now the other important points we'll see: the composition scheme will lapse from which day onwards is aggregate turnover in the financial year exceeds the limit specified under 10(1) and 10(2)(a). So what does it say? From when the composition scheme will lapse? Whenever the aggregate turnover exceeds the limit specified under 10(1) or 10(2)(a). What is the limit under 10(1)? We have seen 1.5 crore or 75 lakhs as the case may be. What is the limit under 10(2)(a? 50 lakhs. So in the current year, whenever your limit exceeds these limits, then in that case, composition scheme will not be allowed to you. Your composition scheme will lapse. Okay, so the aggregate turnover has again the relevance. It has relevance at two places. First, what we have seen up till now. First, whether you are eligible for composition scheme or not in the current year is decided by the aggregate turnover of last year. If it is within limits, yes, you are allowed. Second, in the current year, up to when composition scheme is allowed to you? Up till the time your aggregate turnover does not crosses that limit. Whenever your aggregate turnover will cross that limit, then composition scheme will lapse. I hope it is clear. Then, registered person who opt for composition scheme shall not collect any tax from the recipient on supply made by him or shall not be entitled to any input tax credit. So, if you are a registered person who has opted for composition scheme, then you should not collect tax for the recipient on supply made by him. So, you are not allowed to collect tax from the recipients. From all the recipients, you are not allowed to collect any kind of tax from the recipient. And you are not entitled to any input tax credit. You are not entitled to any input tax credit. You are not entitled to. You understood this point? So, if you are a registered person who has opted for composition scheme, from the recipient, please don't collect tax, you are not allowed to collect tax. And second, input tax credit, you are not allowed to take any input tax credit. Output you have to pay on fixed rates, input tax credit you cannot take, okay. Next, if the officer has reason to believe that a person has paid tax despite not being eligible, in addition to the tax, he has to pay penalty also, and the provision of 73-74 will apply for determination of tax and penalty. Now, you are not eligible for the composition scheme. For example, you are doing continuously interstate outward supply. You are not eligible, boss, for the composition scheme. Then also you have applied for composition scheme. You are continuing with the composition scheme. In that case, officer will determine what penalty as well as in addition to the tax, and he will determine your tax as well as the penalty as per 73-74. Next, so now there are two explanations. One is for aggregate turnover, the second one is for turnover in the state or union territory. So we'll see this. So what is this? So there are two points. Okay, first explanation first is for aggregate turnover. Explanation 1 is for aggregate turnover. Explanation 2 is for turnover in the state or union territory. So we'll see. For determining aggregate turnover, for the purpose for determining his eligibility to pay tax under this section, the expression aggregate turnover shall not include. First we'll see what it will not include. If you are computing aggregate turnover for composition scheme, it will not include what? Value of exempt supply of service provided by way of extending deposit, loan, advances, and so far as consideration is represented by way of interest or discount. In simple words, the interest or discount is not to be included, in value of exempt supply. Interest or discount is not to be included in value of exempt supply, in simple words. For computing aggregate turnover, though interest or discount are exempt income, those are exempt supplies, but for the purpose of composition scheme, the aggregate turnover which we are calculating, the interest discount adjustment, if it is given in the question, you are not required to take. For the computation of aggregate turnover in exempt supply, you are not taking interest on loan, deposit, advances. I hope it is clear. One thing which it shall not include. Next, what it shall include? It shall include value of supply made by the person from first day of April of the financial year up to the day when he becomes eligible for registration under this section. So what does it say? It shall include value of supply made by the person from first day of April of the financial year up to the day to when he becomes eligible for registration. So it should be included. So one second. So what it will include? It will include value of supply from 1st April till the date you become liable for registration. Is it included in aggregate turnover? Yes. Okay. So now we'll see it when the one example also which we have seen in the class. One second. See, what does this explanation want to say? For example, your aggregate turnover in 22-23 was 15 lakhs. Okay, this year you are opting for composition scheme, for example, under 10-2A. Okay, so now for the purpose of calculating aggregate turnover of 23-24. So from 1st April till the date you become liable for registration. Now you very well know in case of service sector, the registration limit is, for example, he is in Maharashtra, 20 lakhs rupees. So from 1st April till 30th September, will it be taken in aggregate turnover? Yes, before taking registration also, yes. From 1st April till the date he become liable for registration, 20 lakhs. When his aggregate turnover exceeds 20 lakhs, then he'll apply for registration. And after that only he will pay taxes. So for the purpose of computing aggregate turnover from 1st April till 30 September, it would be taken, yes, 20 lakhs it would be taken. But for turnover in the state, it will not be taken. From 1st April till the date you become liable for registration, you are not required to pay any taxes. What is the role of turnover in the state or union territory? For the computation of taxes. It is used. So it will not be included in turnover in the state or union territory. From 1st April till the date you become liable for registration, that turnover will be included in your aggregate turnover, but it will not be included in your turnover in the state or union territory. From the date you take registration till your aggregate turnover reaches 50 lakhs, you will pay tax under 3%, 3%. Yes, yes. So it will be included in your aggregate turnover as well as in turnover in the state or union territory, and you will pay tax at the rate of 3%, 3%. As soon as your aggregate turnover reaches 50 lakhs, as soon as your aggregate turnover reaches 50 lakhs, after that you will be out of scheme. After that you will be out of scheme, and then you will have to pay tax under normal rates. For example, on your goods or on your services, the rate is 18%. So you will pay under on next 20 lakhs. For example, the turnover from 1st of December to 31st March is 20 lakhs. So on that 20 lakhs, you will pay on normal rates. Normal rate of 18%. Okay. So from the slab, like after 20 lakhs till 50 lakhs of aggregate turnover, you will pay under what? 3%, 3% category if you are a new registrant. So what does explanation says? Very simple explanation says that from the 1st April till the date of registration will be included in your aggregate turnover, computation of aggregate turnover, but that turnover will not be included in your turnover in the state or union territory, because in this period you are not required to pay the taxes. So this is what both the explanation says. Now again, so see, we'll read the explanations very quickly. For aggregate turnover, you have to include from 1st April till the date you become liable for registration, but will not include what? Value of exempt supply by way of interest discount. This was regarding aggregate turnover, two things. And in case of turnover in the state or union territory, it will not include from 1st April till the date you become liable for registration, one thing. Second, it will not include exempt supply of service by way of extending deposit loan advances insofar as consideration is represented by way of interest or discount. Interest or discount. Okay. So in this case, the interest or discount income will not be included for the computation of what? Turnover in the state or union territory as well. I hope it is very clear. Now very simple points left in this. So interest and discount will not be taken for aggregate turnover as well as turnover in the state or union territory. Now composition scheme is allowed if you are neither a casual taxable person nor a non-resident taxable person. This point already we have seen. Next, stock has not been purchased from unregistered supplier where purchase tax paid under reverse charge. Now this point is not very relevant. When GST came, it was relevant, so you can skip this. You have to pay tax under, this is very important, under 939 for reverse charge on inward supply. On inward supply, you have to pay taxes at the rate mentioned for that. For example, for legal services, if the rate is 18%, you have to pay on 18%. For your supply, for example, you are a manufacturer and you have taken composition scheme. For your supply, you will pay 1% of turnover in the state or union territory. But for inward supply, whatever is the rate applicable for the inward supply liable for RCM, you have to pay that rate. For example, on legal services, if it is 18%, you have to pay 18%. Okay. So 939 for reverse charges, you have to pay at the rate applicable to it. Then you are not a manufacturer of notified goods. This we have already seen. What composition taxable person not eligible to collect tax on supply is mentioned on the top of bill of supply. On your bill of supply, on the top of it, the words that should be mentioned is composition taxable person not eligible to collect tax on supply. Not eligible to collect tax on supply. Words composition taxable supply displayed at predominant places. At the predominant places, this composition taxable person should be displayed. The registered person paying tax under section 10 may not file a fresh intimation every year. So if you are a registered person, you are paying tax under section 10, you are not required to file intimation every year. Now the procedural part, very simple, important, no, not very important, very simple. But if you are taking new registration under GST, how you will exercise option for composition levy? You will intimate in your registration form, and your composition levy will be effective from the effective date of registration. From whichever date your registration is effective, your composition levy will also become effective. Your composition scheme will also become effective. So if you are taking new registration, when you are filing the registration form, in that only you have to intimate, and and your composition levy will be effective from the effective date of registration. But if you are a registered person opting for composition levy, if you're a already registered person, I'm registered from last 2 years, but now I came to know that there is a scheme called as composition scheme. So in that case, what you have to do? In that case, you have to exercise the option. How you will exercise? You will intimate it in the prescribed form, but whenever you will intimate, when you can when it will be effective from beginning of the financial year. In the mid of the year you cannot jump into the scheme. From 1st April only you can get into the scheme if you are already registered person from the beginning of the financial year. So okay, this is simple. And last in this chapter, special procedure to be followed by ECO in respect of supply of goods through them by composition taxpayers. So the ECO who is required to collect what? TCS under 52 has been notified as class of person who will follow the special procedure in respect of supply of goods made through it by the composition supplier. Now if composition supplier are supplying goods through ECO, which ECO? Who are required to collect TCS under section 52. This composition supplier is supplying what? Goods through any website ECO. The ECO is required to collect which ECO? The ECO who is required to collect TCS under section 52. Under section 52. In that case, what is going to happen? ECO shall not allow interstate. So what ECO has to do? ECO shall not allow interstate supply of goods through it by the said person. ECO should not allow him to make any interstate supplies first. ECO has to collect what? TCS in respect of supply of goods made through it by the person and paid to the government as per the provisions. So ECO has to collect TCS on that, and ECO shall furnish details of supply made through it in the statement called GST rate. In its GST rate, he has to make what? He has to furnish the details of the supply of goods made by that person. So there are the three things what ECO has to ensure. That first, he shall not allow any interstate supply of goods. Second, he shall collect TCS. Third, he has to furnish the details in GST rate. When any composition dealer is supplying goods through ECO, which ECO who is required to collect TCS, then only three things he has to ensure. Who has to ensure? ECO first, interstate supply not made through it. Second is he should collect TCS, and third is he should furnish details in GSTR 8. Okay, so this was a very simple but very important chapter, composition scheme. Case study definitely can come in this chapter. Generally, whenever comes, the case studies only come. And again, you know, the case study answer, how you write legal provisions, discussion and analysis, and conclusion. In legal provision, you have to write the provision. Then discussion and analysis, you will relate the provision with the legal provisions, and then the conclusion should be one liner. Okay. And secondly, aggregate turnover computation can come. So in that, and aggregate turnover in the state computation and all taxes can come. So in that case, whatever the notes, whatever the definition of aggregate turnover is there, you have to write. In case of aggregate turnover question, whatever the definition of aggregate turnover is there, you write that and then compute the aggregate turnover, and the calculation should be in your bracket. Okay, so this is how you have to, you know, any practical question, if at all it comes in the exam, how you have, what we do, 2-3 points we have to remember. Working note should form part of your answer. Assumptions you have to write. Calculation should form part of your answer. It should be in bracket. And whatever definitions you are using, you have to quote those definitions in the exam. Like turnover in the state, aggregate turnover, whatever you are using, you have to quote that in the exam. Okay. So we complete this chapter over here, and in the next video we will be seeing next chapter. Okay. So we'll stop our discussion over here. Thank you. Thank you for now.